Hello everyone, welcome back to the channel Investors Cube. In this video, we're going to talk about the 9 highest dividend paying stocks S&P 500 in 2022. Before starting this video, like this video and subscribe to our channel for future updates. If you're interested in high-yield S&P 500 dividend stocks, consider these 9 top companies that all offer yields of more than 5%. Many investors are exploring risk-off options, such as dividend stocks, in light of the volatility we've experienced thus far in 2022. Even if shares don't produce much in the way of earnings, you may count on dividends according to the logic. Unfortunately, the average S&P 500 stock currently pays less than 1.4%, so that's not much of a return. If you're looking for high-yield S&P 500 dividend stocks, take a look at these 9 top businesses, which all have yields of more than 5% at current prices. Although some of these stocks aren't expected to increase significantly in the coming year, if you're looking for stable dividends during an otherwise turbulent era on Wall Street, these high-yield selections are worth considering. Please keep in mind that the information presented in this video is not intended to be considered as investing or financial advice. This video's information is so well curated that it serves the objective of being both informative and educational. To make better investing judgments, you should undertake thorough market research or consult an expert in this area. So without further ado, let's get started. Number 9. Vornado Realty Trust, ticker VNO. Vornado is a commercial real estate company with prime properties in major cities such as New York, Chicago, and San Francisco. It owns and administers a total of about 23 million square feet of primarily office space. VNO receives corporation tax incentives in exchange for a requirement that it return 90% of taxable profits to shareholders as a real estate investment trust, or REIT. Investors may expect hefty dividends from this stock, which are more than 3 times the average S&P 500 firm, thanks to its business strategy and long-term leasing agreements with important clients in attractive regions. Dividend yield 5.2%. Number 8. The Williams Cos Inc., WMB. Williams, a $36 billion energy stock, hasn't created the same kind of news as some other oil names in the recent year or so. While equities have outpaced the wider S&P 500 by approximately 35% over the previous year, some high-flying exploration and production firms have soared by 100% or more. Williams is a midstream energy stock that connects exploration firms with refineries, distributors, and other end users, thus acting as a glorified middleman in the oil field. When crude oil prices rise, that market position restricts upside, but it's a far more stable business. Long-term income investors that look beyond short-term commodity price fluctuations will find it intriguing. Dividend yield 5.6%. Number 7. Iron Mountain Inc., IRM. Iron Mountain was founded in the early 1950s as a storage and archiving organization for physical documents. That current business line is still operational, but in the digital age, Iron Mountain has shifted its focus to digital solutions for its clients, such as cloud storage and cybersecurity. Iron Mountain is a dependable source of critical services for many small businesses, which means stable, long-term customer relationships and consistent dividend payments. Furthermore, dividends have increased from roughly 25 cents per quarter in 2014 to about 62 cents per quarter now, demonstrating a long-term commitment to dividend growth. Dividend yield 5.5%. Number 6. PPL Corp, PPL. PPL is a regional energy supplier with rock-solid operations, provides a popular income investment strategy, buy-in and payout when the dividends flow in each quarter. Due to a restructure over the previous 3 years that involved the selling of assets to pay down debt, PPL hasn't been as consistent as other utility companies. The leaner PPL is still down from its early 2020 highs, but in the long run will become a more focused and stable utility company. Dividends have stayed consistent at 41.5 cents every quarter, resulting in a yield that ranks it among the best-paying S&P 500 dividend companies at the moment. Dividend yield 5.4%. Number 5. ONOC Inc., OKE. ONOC is another midstream energy firm that handles natural gas processing, storage, and transportation. This has been a terrific industry to be in over the last year or two, thanks to the cold weather in parts of the United States and the ability of natural gas to act as a bridge between dirtier fossil fuels like coal and renewable energy sources. Investors may also look forward to a long-term dividend from a firm that has increased distributions from around 29 cents per quarter in 2012 to more than 93 cents per quarter as of its most recent distribution. Dividend yield 5.9%. Number 4. Kinder Morgan Inc. KMI. Kinder Morgan is another energy infrastructure business that is a top S&P 500 dividend stock because of its consistency independent of crude oil or natural gas price fluctuations. The firm primarily runs pipelines, processing plants, and storage terminals for a variety of commodities such as gasoline, diesel fuel, chemicals, ethanol, and other petroleum products. Kinder Morgan is doing a brisk business transferring energy around to end users who need it, while the larger economy continues to enjoy robust demand for these goods. This ensures a consistent cash flow to maintain quarterly dividends of 27 cents. Dividend yield 6.2%. Number 3. Altria Group Inc. MO. Altria produces tobacco brands such as Marlboro, the world's best-selling cigarette, and Black & Mild cigars, as well as smokeless tobacco products such as Copenhagen and Skoal. To expand its business beyond tobacco, Altria has made significant investments in vaping powerhouse Juul and cannabis product startup Cronos Group Inc. Cron. Although cigarettes may not have much runway in the next years, MO is diversifying and is a well-run and resilient company. For example, despite 13 years of dividend growth, the company's $3.60 yearly payout only accounts for around 70% of total earnings. Dividend yield 7.1%. Number 2. Lumen Technologies Inc. LUMN. Lumen may be recognizable to high-yield investors from its previous incarnations as CenturyLink. Lumen is currently a $12 billion player with around 5 million broadband internet customers and a heritage business of phone landlines across the United States, thanks to a series of transactions with smaller regional telecom businesses, such as Embark, Quest, and Quantum Fiber during the previous 10 years. Although it isn't especially vast or dynamic, the stability of these linkages contributes to revenue consistency. This is especially true in rural parts of the United States, where there are few viable communications choices. Even if the firm's present dividend of 25 cents each quarter accounts for just around 2/3 of total profits, income investors may bet on a paycheck for this stock, even if its growth potential is restricted. Dividend yield 7.9%. Number 1. AT&T Inc. T. Investors should place a large asterisk next to AT&T, since the giant telecom company is now yielding a huge amount, but is also on the verge of spinning off its Warner Media division, which owns HBO Max and other businesses. The combination of these assets with Discovery Inc., Disca, a company in which AT&T also has an interest, is part of a corporate reorganization aimed at increasing value for each company separately. Most crucially, AT&T's entire market value, total profits, and yearly dividend will all decline as a result of the merger. AT&T's annual dividend will be reduced from $2.08 per share to $1.11 per share, according to the company. It all depends on how AT&T would be valued after the split, although Wall Street projections put the future company's yield at around 6.2%. That's still high on the list, but it's not likely to be at the top. Of course, these are only estimations, and there's always the possibility that things may change. However, new investors should be informed of the situation. Dividend yield 8.6%. That's all for today's video. Thank you for watching. If you found this video informational, please consider hitting that like button, subscribe to the channel. Make sure to press the bell notification to never miss out on any new updates from us. And also don't forget to comment on your opinion on investing. We will see you all in our next one. Till then, goodbye.